Imagine this. You finish work on Friday, you walk into your bank, and deposit exactly $100. Nothing special, just $100. You leave, grab a coffee, go home, and forget about it. But while you're watching Netflix, that same $100 is quietly helping create hundreds of dollars in new loans across the economy. No one stole your money. Your bank didn't print fake cash. Nothing illegal happened. So, how can one $100 bill seem to help create so much money? Today, we're going to follow that single $100 bill on the craziest journey you've probably never thought about. And by the end of this video, you'll never look at your bank account the same way again. Meet Alex. Alex just got paid. After buying groceries and paying rent, he has exactly $100 left. Instead of keeping it under his mattress, he deposits it into his bank. Alex thinks, "My money is just sitting safely in a vault until I need it." Seems reasonable, but here's the first surprise. Banks don't make money by letting your cash sit still. Imagine opening a restaurant. Customers pay you, but you never serve food. You'd go out of business. Banks work the same way. Their business isn't storing money. Their business is moving money, because that's how they earn a profit. So while Alex sleeps, the bank gets to work. Now meet Sarah. Sarah wants to buy a used car. She doesn't have enough savings, so she goes to the bank and asks for a loan. The bank looks at its deposits, including money from Alex and thousands of other customers, and decides Sarah qualifies. Sarah receives the loan. She buys the car. The seller deposits the payment into another bank account. Now something interesting has happened. Alex still opens his banking app and sees his $100. Sarah has a car she couldn't have bought otherwise. The seller now has money in a bank account too. At first glance, it almost feels like the money exists in more than one place at once. What's really happening is that Alex has a claim on his deposit, while Sarah has a debt she must repay over time. The banking system keeps track of all of these promises and balances. That's one reason banks are so important to the economy. They connect savers with borrowers. Now imagine this doesn't happen with just Alex. Imagine it happens with millions of people. Every day, teachers, doctors, students, engineers, parents, everyone deposits money. Banks use those deposits, along with their own funding and strict regulations, to make loans. Those loans help people buy homes, start businesses, expand factories, open coffee shops, hire workers. Without lending, many of those things would never happen. Think about your favorite local pizza shop. There's a good chance it started with a loan. That new apartment building? Probably financed. The delivery van you see every morning? Maybe purchased with a business loan. The economy grows because money keeps moving. Money that never moves doesn't create much opportunity. Here's the question everyone asks. If banks lend money, what happens if everyone wants their money back today? Great question, and history shows that this can be a real problem. If too many people rush to withdraw their money at the same time, it's called a bank run. Banks don't expect everyone to withdraw everything on the same day. That's why they're heavily regulated. They also keep liquid assets and can often borrow from other financial institutions, or in many countries, from the central bank in emergencies. Many countries also protect small depositors with deposit insurance up to certain limits. These safeguards exist because confidence is essential to the banking system. So, if banks aren't charging people to store money, how do they become some of the biggest companies in the world? The answer is surprisingly simple. Imagine the bank pays savers a small amount of interest on their deposits. Then it lends money to borrowers at a higher interest rate. That difference helps cover the bank's costs and is one of the main ways it earns money. Scale that across millions of customers, and it becomes a massive business. It's a simple idea. Borrow money, lend money, manage risk carefully, repeat. So, did your exact $100 magically become $1,000? No, but your deposit became part of a much bigger financial system that helps fund loans, businesses, homes, and jobs across the economy. That invisible flow of money is one reason modern economies can grow. The next time you open your banking app, remember this. Your money isn't just sitting in a vault waiting for you. It's part of a financial network that's constantly moving, connecting savers with borrowers, and helping keep the economy running. And once you understand that, you start seeing banks in a completely different way. Because sometimes, the most ordinary $100 has a much bigger story behind it than anyone realizes.